Good morning, ladies and gentlemen, and welcome to the show on this Wednesday, the 4th of August, 2021. Glad to have you guys here today. Now, a lot of people sent me in pictures of their pets, and I'm going to tell you guys, really cute pictures of the pets. I'm amazed. They're such cute pets. Anyway, what we're going to do is after I do the market report, after I close out the dollar index, and we're going to take a look at about two or three of the pictures of the pets in the order that they came into my email box. And we're going to keep doing that until we go through all of them. And then maybe you guys can send me in some more after we run through all the pictures. But they're really cute pets. Anyway, but we're going to get started. Now, the first thing that I want to say is the global markets out there right now, they have narrowed things down. And what I mean by that is if the gold price soars over $2,200, it's going to bring down the system. If the bond market, if the US 10-year goes above 3%, it'll bring down the system. If the stock market drops more than, say, 15% or so, suddenly, it would start to bring down the system. They'd have to control it. In other words, what's happening is they're finding a very narrow sweet spot, a channel, in which the system will maintain and keep running in. And that sweet spot is getting tighter and tighter and tighter, where they can't let certain things in the markets move too much in any one direction. And so what they have to do is they have to control all these markets and keep them all in this sweet spot. This is basically what's happening. And the reason for this is as the system becomes more and more over leveraged, it malfunctions more and more, and it wants to either deflate or inflate if it's not in that sweet spot. And the sweet spot's getting narrower and narrower. In other words, they have to extend more and more of command markets that are under complete control. And what they're using to maintain this control is the creation of more currency units. That's where we're at right now. So that being said, let's get started and open up the charts and look into these markets. Let's open up the charts right here and take a look at what's going on. First thing we're going to take a look at is the silver price. And you see what's happened? What did I tell you guys? Gold and silver have to find that very narrow range. And the silver price started to take a rather large movement to the upside earlier today. And what happened is they've knocked it back down again. Like I say, they can't let gold go over $2,200. And I might be being generous. Even gold over 2,000 might start to reflect on the dollar very negatively. Right now, they have to keep things under very, very tight control. So we see the control in the gold and silver markets using the paper derivatives product. It represents gold and silver. Let's take a look now at gold. Look at this. Look at this amazing smackdown. Now, this is really amazing in gold. More so than silver. It's more obvious what they're doing. The gold price shot up this morning. And look, the green. The green is showing what it did this morning. Shot up to the moon. And what did they do? They stomped it back down. I mean, stomped it. Now, that, if you used to looking at charts, you can see that move to the upside was a perfectly natural move to the upside. On the chart, it looks natural. But that water slide down to the downside doesn't look natural. It looks like a forced manipulation of the markets. That's what it looks like on the charts. To me, anyway. That's what it looks like. A forced manipulation of the market. Let's take a look at cryptocurrency today. Now, see, this is not such a vulnerable thing within the financial system. They can let this move a little bit this way or that way, and it doesn't make that big a difference. The things that make a big difference are the Dow Jones, S&P 500, Russell, and these other markets. and also the forex markets too, and the gold and silver market and the bonds market. These are the markets they have to control very tightly. Now, this market, they don't have to control it quite so tightly. They can allow movements to the up or downside without wrecking the system. We're looking at a Bitcoin price of 39,117. Now, let it be known that they are trying to control these markets too. But it's not such a vulnerable part of the system. So they can ignore it more and let it do what it wants to do a little bit more. But they are trying to control them through things like regulation and stuff like that. You know, they are controlling the crypto markets too. They can't let crypto go too high to the upside. Like if they let Bitcoin go over 100,000, they might be looking for trouble within the system, you know. But they can let it. There's a little bit more room for movement there within the crypto market without destroying the system. This is so, I'm telling you guys, this is so vulnerable now. The system is so vulnerable. It can't withstand any shocks. It's found that narrow little range, that little sweet spot that they've got it in the system, and they're trying to follow that up as far as they can into the future without any major shocks to the system. Because the system now is just, I'm telling you, it's like a person that is so sick that they can't stand anything. If you're the doctor for the system, you're like, oh my goodness, this patient is just like, I mean, you got to keep coddle them. You got to coddle this system along at a very narrow range because it's so over leveraged. You know what's going to happen in the end, guys. The system's going to crack up. But how long can they coddle it along and keep it going before it finally cracks up with all this over leverage? And the over leverage insists that the crack up happens in one of two ways. Either they default on everything, or they default by overprinting the currency and the currency defaults. It's going to be a sovereign debt default where the currency is basically destroyed ultimately, or it's going to be a default in the other direction where everything goes bankrupt. Terrible mess. There's no real getting out of it at this point because every day that goes by, they're building up more and more leverage to keep all the bubbles from popping. Basically, it's one of these situations where you say, well, it's basically over. It's gonna crash in one of those two directions. Now, they can't let it crash in the direction of deflation. It would be an utter wipeout, total wipeout. They have to let it crash in the direction of debasing the currency. In other words, your dollar is going to be worth less and less and less and less and less and less and less until it goes poof in the end, you know? And the question for savers and people who are saving for the retirement and everything else is how long is this going to take? And it's not going to take really long at all. If you're looking out into the future, all this is going to play out, probably guaranteed within the next 10 years. And that means if you're saving for retirement beyond 10 years from now, well, this will have played out, and your retirement funds are just going to be eat away with inflation. It's useless. You know, you've got to get off into something. And I'm going to tell you how big this is. Now I'm going to tell you how big this is. More than 99.5% of the money, more than 99.5% of the money is in the dollar denominated asset classes of one sort or another. In other words, it's connected to the dollar. In other words, your savings or whatever, it doesn't matter with money markets and mutual fund. It doesn't matter where it is. It's all dollar denominated and dollar connected. Over 99.5%. All of that 99.5% is going to have to be shoved into what right now represents only less than 0.5%, half of 1%. All of that 99.5% now that's in the other is going to have to be shoved into that other little box. Because the dollar's going to zero, that means that all that stuff that's dollar denominated, which represents 99.5% of everything out there, and the other little 0.5%, which is things like gold, silver, cryptocurrencies and stuff, is going to have to absorb all of that wealth. That means it's going to go up many, many multiples. So ultimately, in the end, when this thing dissolves, they're not going to be able to hold gold and silver back anymore. They're not going to be able to hold crypto back anymore. And it's going to absorb the other 99% of the wealth. So it's going to go up 1 times, 2 times, 3 times, 5 times, 10 times. You got it in its value. So in other words, if you're holding gold, silver, cryptos, its tendency is, through this hyperinflation, is to make you rich. And the people that aren't holding it, those asset classes, they're going to be knocked into such so poor, that they're going to be sitting on the street corner. Even if they got $1 million right now, it's all in dollar denominated assets, it's going to wipe them out. And right now is the time, and this time is very limited, to get out of the dollar and get into things that have no counterparty risk. And in my mind, the best place to go right now to get out of all this mess and try to preserve your wealth is in real physical gold and silver, not in anything. And you got to keep it. You got to keep it for yourself. You got to have it so you can put it in your hand, not somebody else's, so that you can maintain that wealth. Look at it like when you got a silver coin in your hand, and you got your hand wrapped around that silver coin. That's the only thing that you're going to be able to keep that's tangible wealth through this, like a fire. It's like a fire. You know, I'll divert off the topic a little bit. I mean, just for a minute. I got a huge furnace, you know. And one night years ago, in my shop, I got a huge furnace. I mean, it's a big furnace that I saved. Somebody was going to throw it out in the dump. A big cast iron furnace. And it's got a firebox that's like 6 feet long. Quite seriously. You could put a 6 foot long log inside the firebox. So I had that firebox filled up one night with all kinds of softwood that I was burning, the scrap wood from the shop, And you'd never be able to find something in there if you tried to fish it out once you threw it in, So I threw in an old hammer. It had a broken hammerhead. The handle was snapped, right? I threw it in there, just threw it in there. Now, when I first threw that in there with all those other wood in there, you'd never be able to find it to fish it out. But I just let everything else burn. And the next morning, it was easy to find the cooled hammerhead. I just reached my hand in there and pushed my hand around and it filled it immediately. It was still there, the hammerhead, because it's made of steel. Everything else had burned down to ashes. That's what's going to happen to your dollars. Your dollars is like the wood that's in that furnace. It's all going to burn away to ashes into nothing. And the gold is like the steel. It's still going to be there right through this crisis, and it's still going to retain its value where nothing else will. But not only that, it's going to, because it's the only thing it's going to go through is your gold and your silver and your maybe some cryptos, select ones. Those assets are going to become worth so much. It's unbelievable. Because they're going to absorb all the value of everything else that burns away. You guys don't realize the magnitude of this. The Chinese know. They're stocking away those 1 kilogram gold bars as fast as they can. So are the Russians. Canada, what are they doing? They're not keeping any gold anymore. They're just wigging it out of hope and a prayer. Well, they got gold in the ground. They got tremendous natural resources here in Canada. One of the last big oil reserves on Earth is here in Canada. The Canadian tar sands. You know, one of the last untapped. It's almost as big as the Saudi oil. All other natural resources. Canada's got tremendous, but they don't got any gold out of the ground hardly at all. You know, they should be ready for this. I mean, this is coming real fast. Anyway, let's move on. I've spent too much time on there. Looking at the Dow Jones today, 34,887. It's down 229 points. Have confidence that they cannot let this market go down more than, say, 10% or 15%, and the system will start to break apart. And so what they're going to do is they're going to keep maintaining it for you guys. You know, they're going to keep its price up. Whereas gold and silver, they can't let them go up, so they're going to keep them down. This is totally controlled. Crude oil today, 68.51. But you know, the whole thing wants to deflate awfully bad. All the bubbles want to pop, you know. And keeping the markets, all these sweet spots and everything, keeping the U.S. 10-year below 2%, keeping the crude oil below $80, keeping the gold under 2,200, keeping everything in line, keeping everything in line. It wants to break so bad. It's got so much stress on it to deflate that the housing market wants to pop right now. What are they going to do about that? It's like they're spinning all these plates in the air right now, and they got to keep them all spinning. You know, you remember those old things where the guy used to spin all the plates? This is terrible, what's happening. But nobody sees it. Everybody out there, because they're controlling everything, everybody thinks everything's hunky-dory. Oh my goodness, crude oil 68.51 today. It's down $2. The move index 65.42 today on the move index. The move index is moving up just a little bit again. It's getting up towards 70% again. But this is your volatility index of basically the credit markets, how volatile they are. Bonds and rates today, we got rising yields. And it's fairly substantial. 1.21 on the U.S. 10-year. It's up 3.6 basis points. And the U.S. 30 years at 1.87. It's up 2.4 basis points. Now let's take a look at U.S. dollar index. 92.23, and the dollar's going up today. So they're buying into the dollar. Yeah, that's a great move. Okay. Now we're going to take a look at some of our pets here. Okay, now let's take a look at our pets. Awful cute pets. The first one we're going to take a look at is Donald's dog, Duncan. Now, Duncan, he says he listens to Glenn on the 7th. And that's him listening to my show. Awful cute, isn't he? Looks like he's a Labrador. Some of these pets are so cute. Now, the next pet we want to take a look at is John's pet. That he says it's not my pet, but I pet him every day on my walk. You know, so he stops by and gives this dog a pet every single day on his walk, I guess, and so it's a husky, and his eyes are awful cute. His eyes, one eye is one color, and one eye is the other color. Now the third pet is Sasha's pet, and this pet is called Maya, and Maya is a is a is a cat, And it says, my cat's name is Maya. She's a 4-year-old Russian blue cat. And she's very pretty, you know. She's a very dignified looking cat. Uh, and you can just tell by looking at her face, she's extremely dignified. And she's you can tell she's very well taken care of, and she lives in the lap of luxury. Look at that soft cushion she's sitting on. Awful cute, isn't she? Anyway, listen, those are the ones for today. I'm going to tell you guys what I'm going to do about 3 every day until I'm through the list, and there's a whole bunch coming. And so, listen, thank you. If you didn't see your pet today, you'll see them soon because I'm doing them in the order that they came in to my email. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.